Welcome to this explainer. Today, we're strapping in to explore what I like to call the modern gold rush. We're diving into the wild, highly speculative, and absolutely fascinating world of AI microcap stocks. We're looking at the prospectors of 2026. This is that exact spot where the potential for life-changing returns meets, well, some pretty stomach-churning volatility.
So it's the question literally on everyone's mind right now, right? Did you miss the NVIDIA boom? Look, we all know the giant tech companies are out there selling the picks and shovels for the AI revolution. They're dominating the headlines every single day. But if you're looking for that explosive, asymmetric upside, you might actually need to look past the giants. We're talking about focusing on the smaller prospectors, the companies operating at the ground level, where just a single, massive breakthrough can change the whole shebang.
Here's our roadmap for today's explainer. We're going to cover 1. The asymmetric AI opportunity, 2. SoundHound AI and their voice tech, 3. BigBear.ai's defense analytics, 4. Niche AI infrastructure plays, and 5. Managing penny stock risks. Section 1. The asymmetric AI opportunity and staking claims in the modern gold rush. 30 to 40%. Let that sink in for a second. That is the projected compound annual growth rate for the broader AI market through the end of the decade. This massive tailwind is being driven by enterprise adoption, complex government contracts, autonomous systems, and edge computing. The market isn't just expanding, it's moving at an absolute breakneck pace. But since we're talking about microcaps today, we really need to define exactly what we're dealing with here. Asymmetric upside. It's a high-risk, high-reward scenario. We're looking at small investments that could literally surge 5 to 10 times their value based on a single contract or sector momentum shift. But, and this is a massive, absolutely crucial but, they carry the distinct, very real risk of going to absolute zero. Make no mistake, these are not safe havens, they're speculative claims. You need a high risk tolerance and a long-term horizon to even consider playing in the space. Section 2. SoundHound AI, the prospector in conversational AI. Okay, so SoundHound AI is truly fascinating. Trading recently around $7 to $9, they are rapidly outgrowing their penny stock status. Just think about this commercial traction. They specialize in voice AI and natural language understanding. And they aren't just building theoretical tech in a lab somewhere. Their on-device voice technology is capturing massive real-world territory right now. We're talking integration into vehicles for Stellantis, so think Chrysler, Jeep, Dodge. They're powering drive-thrus for Chipotle and Krispy Kreme. Plus, they're expanding into enterprise retail with their sales assist agent and a strategic acquisition of LivePerson. Now, what's really interesting here is their hyper-growth trajectory. In 2025, they delivered a record $169 million. And their 2026 guidance? It points to a midpoint of $242.5 million, which implies a continued 30 to 50% growth rate. If they hit their low-end target of $350 million in 2027 and expand their operating profit margins toward 30%, wow, we are looking at a pure-play AI powerhouse. Now, while there's high conviction here for this to be a multi-bagger, a stock that multiplies your initial investment several times over, the risks are still immense. SoundHound is a small prospector that absolutely must maintain its edge against the towering, well-funded giants of big tech. They have to perfectly execute on their acquisitions to justify their premium valuation, for sure. Moving on to Section 3, BigBear.ai, applying AI for defense analytics and national security. Let's dive into BigBear.ai, currently trading around $4, which applies machine learning to incredibly complex defense supply chains. Now, their financials, they're honestly a lot like an iceberg. Above the surface, their 2026 revenue guidance is a pretty modest mid-teens growth of $135 to $165 million. But lurking beneath the surface is their hidden weapon, a massive $282 million backlog. And that backlog doesn't just come out of nowhere, it's fueled by some incredible catalysts. BigBear has a heavy focus on U.S. intelligence and the Department of Defense. They actually recently secured a $53 million sole source classified award, which, by the way, is a massive signal of trust. On top of that, they're rolling out their Ask Sage generative AI platform, and they've already shown significant margin expansion up to 34% in early 2026. Now, because they deal with lumpy government contracts, the stock is naturally going to be volatile. But their leverage in bipartisan-supported national security, it gives them a formidable, deeply entrenched moat that is incredibly hard for competitors to cross. All right, accelerating our pace. Section 4, niche AI infrastructure plays, staking claims in media, roads, and batteries. So, the crucial point here is the sheer diversity of these ground floor applications. It's honestly staggering. First up, Veritone, trading under $5. They provide AI for audio and video media intelligence alongside Oracle Cloud and are targeting up to 145 million in 2026 revenue. Next is Rekor Systems, trading under a dollar, focusing entirely on AI-driven roadway intelligence for smart cities. And finally, SES AI, which ties AI to energy by using artificial intelligence for materials discovery to build better lithium metal batteries for EVs and drones. These are highly specific bets, trying to become the literal backbone of tomorrow's physical and digital worlds. Section 5, Managing Penny Stock Risks and Surviving the Expedition. Look, we cannot talk about explosive growth without doing a serious reality check on the dangers of this expedition. Here's the sobering reality. Valuations in this space are frequently stretched based on narratives rather than current profits, and many of these microcaps are just burning through cash. You absolutely must expect extreme volatility. You're going to face limited liquidity, meaning it might be tough to enter or exit positions at the exact price you want. Companies will miss their execution targets, and as they need more cash, you face the very real threat of shareholder dilution. So, how do we handle this? Well, here is a practical survival guide for the aggressive investor. Step 1, diversify across different AI sectors. Step 2, always utilize limit orders to protect yourself from wild intraday price swings. Step 3, dollar cost average into the strongest names rather than jumping in all at once. And step 4, the golden rule of speculative investing. Never, ever invest more capital than you can comfortably afford to lose. We've seen the real-world commercial traction of SoundHound, the defense moats of BigBear, and those niche infrastructure plays getting ready to build the future. Selective microcap exposure could reward patient, informed investors handsomely. But at the end of the day, the ultimate question isn't just about the technology. It's about you. What is your risk tolerance for the AI revolution? Are you ready to stomach the ride, or are you better off watching from the sidelines? Thank you so much for joining me for this explainer. Stay curious and keep learning.